Hey traders and investors, very important lesson here. Fundamentals. I'm going to put fun in fundamentals using the Wall Street IO tools. What are fundamentals in a nutshell? Remember this. Charting equals when to buy. Charts are when to buy. That's your timing instrument, whether you're a trader or investor. But fundamentals tell you what to buy based on valuations. So when you're looking at a chart, before you trigger into that chart, is it a good company? Is it a bad company based on fundamentals? Are they losing money, making money? What are they worth? Can you look at that chart and say it's valued, overvalued, undervalued, or is that about right? Where do you price this company? Where's your targets? Let's go look at this. It's pretty simple using the Wall Street IO tools. Why? Because we made visuals to make it fun. So bottom line, I'm going to show you the short and skinny of it on getting your read. I'm just pulling up NVIDIA. It's not a recommendation. It's just something I grabbed right away. It was last stock on my chart, but it had impressive fundamentals. I'm going to go down here. I'm going to click this fundamental button down here on the bottom. And in a matter of seconds, I'm going to know if it's valued, undervalued, or overvalued, or if it's good. When I'm in fundamentals, I'm jumping right to valuation. Now, when you're in valuations, there's a lot of numbers here. You got price to sales, price to cash flow, enterprise value, free cash flow, and a lot of other data. And real quickly, to give you a sneak peek on that, if you go into the financials, you have stuff like PE ratio, price to book, the EV PEG ratio, gross margin, operating, a lot of different accounting numbers, dividend history, what have you. I'm going to come back to you and show you what I look at. What we've created here at Wall Street IO is a fun visual. How this works, let me duck my head out here so I can show you exactly, is the green line is the profit of the company, the money coming in, that green line right there. You can see that it is going up and down, but it's trending up and it's actually getting stronger. That is revenue, that is sales. That is that S number right there. So I'm going to show you that S number by clicking it. The price is the blue line. This is the price of the stock. This is the stock chart on top of the fundamentals. What an awesome way to look at representation of, is it overvalued or undervalued? What do we get here? We get a number of 26%, which is trading at a discount. Now, why is it a discount and why is it undervalued? Because the price of the stock historically is below the green line. And the green line is going up. That means it's undervalued and it's good based on those metrics. But if the green line was going down, that would not be good. So it's all about, is the value of the company going up? Step number one, that looks good. Let's go to the next two steps. Price over free cash flow. Is the green line going up? Check. Is it undervalued, the stock price? Yes, it is. You see, if you would have bought every time it's below the green, that's where it's at value. When it's above the green, that's where it's overvalued. So what is this company worth? Could it go back up? Yes, the stock could go all the way back up to here, which would be a 38% gain fundamentally. So looking at enterprise value over free cash flow, this is the actual value of the company right here. The enterprise value is what? And it's all down here. It is the market cap if you bought all the shares, meaning you're buying the company, you're also buying their debt, their loans and their debt, and you also get any cash they have in the bank. So you get whatever savings they have, you get their debt, because when you buy a company, if you bought their shares, that's what it's going to cost you. But guess what? The company's worth that, and it's increasing in value. So once again, it is undervalued by 38%. So now you know, based on these three steps right here, you have an undervalued company. Now you go to the charts and wait for your buy signal. So that's how you put a valuation on a company. The other thing, that's probably the best visual you're going to get for any financial program out there to find a company quickly. I haven't found, and this is why we built this at Wall Street IO, is so you can look for companies that are at a deep discount, near historical lows, and if they're below average in a compressed mode. That's what you're looking for when you're looking for good fundamentals. Now, let me go through and show you what else you have in here. You have the overview, which lets you know where it stands as value, growth, stability, gives you a score, the key metrics. You have a little overview of the earnings estimates in white dashed line. You have the green actual. You have the buy and hold ratings, and you also have watch items. AI helps us out with this. It wraps it up, tells us the strengths and weaknesses of the company on the overview page 1. When you jump into the financials, this is where we're going to look at the dividend. The dividend payout is over here. You can see it's increasing the dividend. You can see the dividend's increasing. Big jump in 2026. Here's the estimate, 52 cents. Here's the dividend yield. Not a real high yield, but you can see that it's only been going for a couple years here. Now think about this. Is the dividend healthy? Do they have the money to keep this going? Is it sustainable? Boom, right there, shareholder friendly. That's all you need to know. What it's telling you is here's how much money they have in operating cash flow. Here's their CapEx, which equals that after CapEx. Do they have enough money on that 119 billion to pay their dividends of 973 million? Absolutely. They even have enough money to buy back $53 billion worth of shares. Even after their dividend and buybacks, guess what? They still have that much money left over, and it's increasing. So their dividend is definitely healthy. In fact, I think they could kick down a little bit more, personally looking at that, which is why it's shareholder friendly. Quarterly financials are rising. Net profit, you can see, is in green, double digits. That's considered a very high growth company when it's that high. Looking at earnings, you've probably never seen anything like this. They beat 100% of the time on quarter 1. It's easy to predict. They have an earnings score of 77, which means they're predictable. Quarter 2, 90%, quarter 3, 80, and quarter 4. So would you hold through earnings knowing this? Can you guesstimate where they're going to be? Yes, you can, based on 20 years of data. On day 1, here's their performance on average, whether they beat or miss. What about next week? Where are they usually at? They're usually down if they miss. And how about 2 weeks from now? They're usually up decent if they beat and down about 2% if they miss. So that tells you a lot. Like, do you want to hold through earnings? Or is it predictable, etc.? And then here is your earnings trend right here. And here's the data to back it up, the actual data. And by the way, this is all green if they beat, red if they miss, to make life easy to see the numbers. Back on valuations, now you understand where that green line is coming from. Analyst recommendations, what's their price target? Big upside, 64%. That's the analyst opinion. And who is that? Their names are down here. You can see when they initiate a buy or sell down here. We have no sales, all buys. SEC risk, if you're to go into the 10K and spend hours and hours looking for all the risk. We built this into Wall Street IO. The AI genius inside of Wall Street IO does this for you. There's 44 risks, 7 categories. What are the categories? Regulatory, strategic, external, and so forth. I want to see those risks. I can open them up and read it. Again, how much time do you want to spend on fundamentals? Well, it's all here, everything you need to know. Here's the profile of the company. If you want to mail them a letter and know what they do, here it is. You're going to have a screener that looks for all the different metrics here pretty soon. Back on valuations. Let's go compare 2 companies. I'm going to compare, for example, I'm going to compare AT&T versus Verizon. So looking at the price to sales here, it's going up a little. The company's pulling back. It's right even with the price to sell. So it's not undervalued there. It's not overvalued. Looking at the price over free cash flow, you can see the green line's going down. Green line's going down, and guess what? Stock price is following it. So even if it was undervalued, I need this green line to go up. But this, I'm just, taking them for what it's worth. Let's go look at free cash flow here. Free cash flow, same thing. Green's going down, of course, that's free cash flow, but the price of the stock. So it's a little bit overvalued, not bad. It's basically in line with its declining value. Let's go to one of its partners here or competitors, Verizon. Verizon, on the other hand, undervalued here on the free cash flow versus enterprise value. The green line's not the best. It's not going up, but it's doing better than AT&T. I come over to price over free cash flow. It's undervalued. And looking price to sales, sales are going up. It's undervalued. So in a nutshell, I already compared two stocks, completely undervalued with growing sales slightly. If I want to zoom into those sales to see it, I just go like this, and you can see that it's trending up slightly. If I want to go to the earnings and look at the earnings trend, it's pretty stable. It's not bullish, it's neutral. And if I want to check out the dividend, shareholder friendly, done. I just compared two companies and found the best of the best. Now I know what to buy. When I go back to the charts, I'll determine when to buy it when I get a buy signal. So as the stock is dropping down, those valuations are becoming more and more undervalued, which is good because that means it's still got that green line going up. It's a good value company. That means more room to the upside. So that's how you do it, guys. I hope that I put the word fun in fundamentals. Crunching all those numbers makes it easy when you have a visual. Let me give you that visual once more so you can see how easy it is to see if a company is undervalued or overvalued. I'm going to randomly type in a company here. Tell me what you think. Give me some comments below. Is this company right here look like it is undervalued? And does it look like it has some room to go up? That's exactly what you want to see on an undervalued company. There it is, fundamentals, Wall Street IO, Coach Gino. See you next lesson.